with a repeat guest. So I'll let you introduce yourself and what you do.
I'm Brandon, the co-founder and CEO of Treehouse. I came from a TradFi background, but right now Treehouse is building what we call the fixed income layer. And it's going to be a whole new product that no one has ever seen yet. And our premise is that...
What has been your biggest lesson as a founder?
As a founder, you want to do everything you need to get your business to do well. But I think the biggest lesson is...
Awesome. Well, super excited to be here. This is our first podcast we're recording at Token 2049 this year with a repeat guest. So some listeners might be familiar, but I'll let you introduce yourself and what you do.
Sure. Thanks for having me on again and welcome to Singapore. So for those who don't know me, I'm Brandon, the co-founder and CEO of Treehouse. Background-wise, prior to this, I came from a TradFi background, but right now Treehouse is building what we call the fixed income layer.
Mm-hmm. And how did you end up in DeFi?
Yeah, sure. So, as I mentioned, I've always been in traditional finance. I spent 7 years in the fixed income space. So prior to this, I was at Morgan Stanley, and I was in a way I was a trader in the day, but at night I was a degen.
Mm-hmm.
And we had a group of friends at MS that was very active in DeFi. Since the early days, and all of them just started leaving to start their own hedge fund and to start their own protocol. And I was pretty much the last one in 2021. And I was like, okay, I think it's time for me to take the plunge.
Wow. So was there like a whole crop of DeFi degens, or how did it work? How did you guys find each other? Was it taboo?
No, so it was actually at MS, at Morgan Stanley. And,
oh, wow.
Have you heard of this hedge fund called Amber / Market Maker? So they were at MS, and they're all in the Asia desk as well in fixed income.
Mm-hmm.
And then there were two other hedge funds. I don't want to name them because I'm sure they want to be quiet. But the guy sat right next to me, and he was one of the earliest guys in uni sushi, and yeah, that's how we just kicked it off and just kept trading at night.
Way cool.
Yeah. Actually, what about you? I'm curious to hear. How'd you get into
Thank you.
Yeah, how'd you get into DeFi?
Thanks for asking. Yeah, no, well, I studied finance, but I was working in corporate finance at the time. And then I remember in March 2020 was reevaluating my personal portfolio after the big crash. And the actual story is that I had watched Forrest Gump, and in Forrest Gump, there's a scene where they talk about hey, I put all our money in some apple farm or something, and now it went up a lot, and now we don't have to worry about money anymore. And the joke was that they were talking about Apple stock, and then Forrest Gump came out in 1994. So I did the math, and if you would have invested in Apple stock in 1994, where it had already been this famous story for making people incredibly wealthy, then 25 years later, it would be worth, $10,000 would be worth, $2.8 million or something. So I was thinking about what is a story in markets right now where it has already made people really, really wealthy, but that might kind of continue. That might be this much bigger kind of secular trend. And the conclusion I came to was Bitcoin. And I had already bought some Bitcoin and stuff in 2017.
And were you on Reddit, scourging for investment opportunities, and Bitcoin came up? It's kind of like me. That's how I kind of
there was a lot of stuff I was looking at, and I was previously into kind of equities and trading a little bit, but it wasn't until I came to crypto that I got a bit more deeply involved. And then I started a newsletter, and that has ended up with me becoming a crypto podcaster, but that's kind of the basic trajectory. You talk about Treehouse as the DeFi fixed income layer. What does that mean for kind of a layman or, the average, Coinbase user or something in simple terms?
So, I like to draw parallels, and, in the traditional finance world, fixed income is actually 5 times larger than equities. Right, your Tesla stock, your Nvidia, but yeah, at the end of the day, fixed income is just so massive. But when you look at it from a digital asset perspective, it's still very primitive, right? There's still a lot of missing infrastructure, and our premise is that the same way how you look at the story of traditional finance of how fixed income started taking off, it's going to happen in crypto as well. So we've built two specific products, and I'll get into that. I'm sure you have questions around that. But yeah, that's the key premise.
Right. And I think an important thing to note here is part of the thesis was that fixed income wasn't as developed of an industry until the infrastructure and products began being created in the TradFi industry, and that you see a parallel kind of in DeFi. Is that the case?
That's exactly right. So the best way to, to zoom back to the 1980s. So during that era, fixed income was big, right? There were loans, there were commercial loans, there was mortgages, but it was pretty simple. But that all changed in 1981 when this infrastructure came out called LIBOR, the London Interbank Offered Rate. When LIBOR came out, it spurred the development of like new products, and from there on, you just saw like a hockey puck in terms of new innovations in fixed income, as well as notional, as well as volumes. Like the following year, interest rate swaps were developed. So interest rate swaps, for those who don't know what it is, it's actually like the largest traded instrument in the world. And oftentimes because institutions are the one trading these. And then a few years later, mortgage-backed securities came up, and a bunch of new innovation. And all that came about when LIBOR sprung up. And LIBOR is what we call a benchmark rate. And that's what we're trying to replicate at Treehouse.
Mm-hmm. And that product is called DOR?
That's right. I'm happy to jump into it.
Sure.
So yes, it's called decentralized offered rates. And the idea, again, it takes a lot of inspiration from traditional finance in that LIBOR takes consensus from a bunch of experts to find consensus. It's similar to like a blockchain finding consensus, but for a specific benchmark for someone to use. So a bunch of banks come together and they say, hey, I think this rate should be here based off the data that I have. But the issue with traditional finance, as we found out later on, in the late 2000s, was that LIBOR was prone to manipulation. And our premise is that yes, benchmark rates are super critical, extremely important. But if you put in principles of decentralization, you can make it trustless, and you wouldn't have it's a lot harder for collusion to happen. So DOR is taking principles of LIBOR and another type of benchmark called SOFR. We've built it in the form of an oracle. We've added, checks and balance. There's a token involved to make it decentralized.
Right. And talk to me about the adoption of the product. Now this exists, how has it kind of come into the world, and how are people using it?
Yeah, sure. So there are multiple counterparties in the DOR ecosystem. There's one called an operator. So these are folks that want to build a specific benchmark. So think of DOR as a framework that can build any type of benchmark, whether it's from the TradFi world, even in the crypto world, right? So we are working with several protocols, several benchmark institutions, even TradFi institutions. So on the protocol side, we are working with EtherFi. So there's an EtherFi benchmark rate. From the jumping into the TradFi world, I can't name names, but we're working with some regulated benchmark counterparties. They're looking to use our infrastructure. And then we actually just announced yesterday a partnership with FalconX, one of the world's largest prime brokers. We've effectively launched the first ever Ethereum staking rate forward rate agreement. And it's a lot of complicated words, but effectively what a forward rate agreement, or FRA for short, it's a string of instruments that allows people to lock in a fixed rate. So if you look at Ethereum staking rate, it's a variable rate, and you don't really know where it's going to go the next few days because it's based on data that happened in the past. We've created a market where people can trade against each other to lock in a rate, and that's very critical, important for hedging, potentially even speculation.
So with one of the principal narratives of the last couple of years has been institutions entering, specifically digital asset treasury companies. I know this might be particularly relevant to them. Have you seen any of this, or how have you seen companies pick this up, and could it be applicable to something like a digital asset treasury?
Yeah, so I think there's definitely a link in for those instruments that provide a native yield. And I think ETH is like the strongest use case of that. When you stake your ETH, it provides a yield that is based on real actual usage. And a lot of these DATs right now, they're just holding on to spot positions, but putting it to work would be beneficial for everyone, right? And for them, not only putting it to work is important, but having a fixed yield on that yield and not having the volatility to know, hey, am I going to be paid tomorrow or not? So, we definitely have conversations with a lot of these big folks, but practically there's also a lot of like regulatory implications behind it. So our conversations there are still early, but yes, we're talking to like the biggest guys that are out there.
Phenomenal. One stakeholder that is new in your kind of ecosystem right now are the token holders, the Tree token holders, because you guys have recently launched a token. Talk to me about, I guess, first of all, how that token kind of fits into your ecosystem. And second of all, what has it been like to launch a token and to go throughout that whole TGE process?
So two parts to the question. The first part is, what's the use case of Tree? And then the second part of the question is, what was the process like getting listed?
Right.
So Tree, the use case behind it is that it powers the Door system at the end of the day. So there's multiple counterparties. There's 5 specifically in the Door ecosystem. And Tree is really, holding everything together. So there's check and balance, there's incentives, there's also disincentives. So in order to be an operator, for example, you need to stake a specific amount of Tree. And that is beneficial for everyone. And it's the right kind of incentive because, if you want to push out this new data pipeline, you need to have something at stake. So they would have to stake some Tree. At the same time, panelists would also have to stake some Tree. And delegators is another role, which that went live when we launched token, where they're able to select and pick different panelists of where they think they'll perform the best. So there is a checks and balance, 3 things: checks and balance, incentive, and then disincentive, and it's all kind of powered by Tree. And of course, Tree is also a governance token.
Right.
To jump to the second part. The listing process is obviously a very long process, but it's extremely important. I think, as much as, we focus on the product, the token itself is what gives life to the product for a lot of projects in general. So I spent, the majority of the past 6 months before TG just focusing on the token. And, how it's interesting, right? Because you also have to realize that it's ultimately a distribution channel to get people involved. And that's, I look at it from from the perspective of getting listed is that it is a supply and demand, kind of situation at the end of the day, right? When you have a token, distribution channel opened up means more demand. On the supply side, putting use cases are kind of like sinks. So there's a lot of factors that goes into it, but it was a very long process.
And I guess one thing that's interesting about token is most of the interest in a project comes from, at least in crypto today, comes from this speculation around a token, when token, and then the token, and then people are interested based on the token, right? So pre-token, often the community is mostly interested in kind of like the future of the token. How have you noticed? Have you noticed a lot of community members come in and be curious about the token, people learning more about the token, or how has that kind of community evolved over from pre-token to post-token?
Yeah, sure. So you're exactly right. Having a token also is a mean of organic as well as inorganic growth. And for us, we really wanted to focus on organic growth. So before we TGE, we had about $500 million in TVL. And we made sure that, I wrote a post about it on Twitter where we made sure that, we didn't want to do any side deals at all. And if the underlying reason is that, the product should speak for itself. Right. It should really provide, benefits beyond just, obviously, having a token is important as well, especially being in the space because it's very competitive. But we wanted to have our minds in the right space and to focus on real organic users. So after we TGD, in terms of the drop off, it was actually flat for us. So in most cases is not really flat. So I think it's also like the type of users that we focus on, and we were pretty upfront with all the funds that we're talking like, hey, there's no side deal involved, and we're proud that we can say that.
Right. Yeah. Plus, it speaks to the product, right? Where you see misaligned incentives, let's say among projects who don't have as clear kind of delineation between where the token starts and the product ends, and it leads to kind of some conflicts of interest or less sustainability around the product itself. You guys understood going into the TGE that you had a product that it had this much organic adoption, et cetera, which is cool to see. How has the product grown since TGE? Metrics? Do you have any numbers that you can share with us around adoption?
Yeah, sure. So we have like 70,000 users right now on TETH, unique addresses. And then we just recently moved to AVAX. So we launched TAVAX, I believe like 7 days ago. It's like a week ago.
Wow.
So we have, I think, close to 1 million now. It's slowly growing.
That's crazy.
And we're pushing it. We're trying to push it harder. But in terms of TVL, we've been, kind of comfortable at the half a billion range.
Mm-hmm.
And we're not pushing it, right? So we actually have a cap on our vaults, and it's done on purpose because we don't want to dilute the yield at the same time.
Mm-hmm.
In terms of door is really where I've been focusing most of our time since post TGE, and the key thing is that door is ultimately an infrastructure. We can wait for people to build on top of us. That's a lot of times. That's what people do, and we can incentivize people through grants. So we have like 3 protocols building on top of us exclusively right now.
Mm-hmm.
I can't really name them, but there's quite a few interests around guys using our infrastructure. But we're not just waiting around also. So we also take the approach that we should build on top of our own product. So there are 2 main things that are actually happening internally. We've been building it for quite a few months now, and it's related to a perp dex.
Okay, cool. Very cool.
So actually it's the first time I said it, but yeah, it's been in the works for quite a while.
Well, that fits well into kind of the current narratives. Obviously, we've seen incredible adoption around Hyperliquid, now Aster coming into play. Yeah. So how big do you see that kind of potential market? Is this again one of those cases where the market is orders of magnitudes larger because of the way it kind of addresses the broader industry?
Yeah. No, you hit it right in nail. Like Lighter is also coming out, Aster, insane valuations, right? But all kind of premise on Hyperliquid being so successful. I think for us, it's the kind of perp dex that we're focusing on. It's going to be related to the theme that we're pushing, which is fixed income perp dex. So interest rate perp dex, and it's still very early. So I'll be honest, right? I mean, it's going to be a whole new product that no one has ever seen yet. It remains to be seen. But what I can say is that it definitely provides a new use case for individuals in terms of hedging, right? So it doesn't have to be only related to like ETH staking, right? It can relate to the real world, it can relate to like even mortgages, as well as like other layer ones that have staking yield. Anything with an interest rate component will be able to do it. So we're not focused so much on funding rates. So that's Boros, right? I mean, we talk to them as well. So our side is more on the interest rate side. And I think it's going to provide a very unique new product that no one has ever seen before.
Right. Going back a little bit to Avalanche, we've seen, I think the token has been massively successful, but also Avalanche has been successful recently with adoption, especially institutionally. How did you guys key into that narrative, and how did that come about? How did AVAX come about?
Sure. So, we were thinking about, within the T asset space, what change should we focus on? And I think the metric that we used was, when we launch any new T asset, it has to provide a use case. And in the case for TETH, there are actually structural inefficiencies in the way, borrowing lending yields are. And there are, actual opportunity in the size that you can build it to where we have 500 million in TVL and still can do, give individuals a pickup in yield, right? So AVAX has that size, it has that scale, and it's true real yield, right? It's not so much Ponzi yield. So we were very clear when we kind of did our metrics to just look across all the layer ones. AVAX was really really clear, and the team, the foundations over there is extremely open and helpful. So it was a no-brainer for us.
Your products are kind of adjacent. Do you think that Avalanche also addresses that institutional space that you guys are also focused on?
Yeah, for sure. They're actually one of the protocols that's building on top of us sits on AVAX or is about to launch an AVAX. So they're also focusing on, like the RWA segment. And within RWA, fixed income is obviously the big one that's coming in.
Excellent. Speaking of that, how has the fixed income space evolved since we last spoke?
Well, it's tremendously, right? We did the first ever ETH forward rate agreement, right? And as I mentioned earlier, it is the largest traded instrument in the world, in the TradFi world. I think that can open the door for staking houses to be able to lock in the yield with the folks that stake with them, or even for people who deposit their ETH on certain exchanges, where these exchanges can then go and tap into this market and start hedging, and start providing users a fixed yield. So that's one that's related to us. But in general, I think the space is fixed income is growing so much. RWA especially, you see more and more RWA fixed income assets coming on chain. You see a lot of new chains that are only specific to RWA, and really, I think majority of them, for them, the focus is fixed income. So I foresee that continuously growing. And I think I shared this the last time in a podcast, is that when you look at crypto in the global macro space or like of investable asset, we're only just like 4 trillion and like $500 trillion worth of assets that are liquid and tradable. Which just close to 1% only. And really, for it to grow, yes, you can grow organically. You can have money that goes in, or you can take this chunk of assets that are out there and plow it in there, and where hopefully in 10 years time, you don't have a digital asset as well as traditional finance. It's just finance. And when that happens, I think a big chunk was going to be represented by fixed income, and you're already starting to see that.
Right. I think so far, we've kind of seen this bifurcation of the space where we have the institutional side of things, and they're focused on, just essentially kind of holding major kind of blue chips, Bitcoin, Ethereum, a little bit of Solana right now. Maybe they're getting curious about staking right now. Then we have this other side of the industry, which has been kind of mostly retail-driven adoption, which, Hyperliquid, I would say, is arguably mostly retail adoption. The meme coin phenomenon of kind of 2024, I guess, 2023, 2024, 2025 maybe, has been obviously retail adoption. How do you guys feel that you fit in the space? And do you think that you can build compelling products for retail, or are you much more focused on the institutional side of things?
Yeah. So, as with, the traditional finance world, people don't even know. I mean, from a retail perspective, most people don't really know too much about fixed income still, I feel. But, at the end of the day, like when you go to a bank and you lock in your deposit, that is, even if it's variable, it is a fixed income product. So we take the same approach in that we want to work with institutions, and we want to work with protocols that can build products that leverage on top of what we have to then serve, different types of customers. And that could be retail as well.
Right.
So that's the approach that we're targeting, not so much direct to retail. TETH as a product, in a way, it's kind of, sits in between, in that there are a lot of institutions, a lot of funds that deposit there. But we also have a good chunk, as I mentioned, we have around 70,000 unique users that have deposited with us. So that's the one that has touched both, I would say. But from a door perspective, it's going to be very focused on the institutional side.
What is Project Bamboo?
Oh, so Project Bamboo, I think I brought it up the last time. So it's actually the FalconX project. So yeah, that took a year. And I think the last time we spoke was close to a year. Yes, Project Bamboo finally came out yesterday. We announced it. It's the partnership with FalconX.
Phenomenal.
Yep.
And then another part of the token, or I think token has enabled you kind of to step into this space is tree grants. So who are they for, and what are you guys doing with that?
Yeah, so as I mentioned, there are already 3 protocols that are exclusively building on top of us. So, anyone that, can leverage on top of the Door ecosystem or to build their own specific benchmark, we're giving out grants, and we've been actively doing that. We have different RWA projects that are doing it. We have even like university students that have came up to us, who look at Door and say, wow, can I build something on top of that? So we've been very open, and ultimately the grants are to help spur the development of the fixed income space, right? Anyone that's building on fixed income, like any form of fixed income instrument, we want to be right there, and yeah. So that's where we've been deploying a lot too, from in terms of like grants.
So now we're in a new space around kind of the evolution of Treehouse. And you've mentioned some of the things that you guys are working out. Looking a bit further along on the roadmap, to a year further down the line, what does your roadmap look like, and the long-term vision for the project?
Yeah, so we have multiple products, right? But a key focus for us is just to keep on building on top of Door. And as I mentioned earlier, if we can wait for people to build, or we can build it ourselves. So what you're going to see from us is several new products that we've built internally, and we've incentivized specific teammates to just kind of take it away on their own, and we've provided support in the form of grants to build on top of us. So I'm very excited for the perp decks that we're working on, and yeah, it's going to be very different from what you see out there, and there is actual use case beyond there's actually hedging use cases. Of course, there's speculation, but even from a staking house perspective, you're able to get involved. So I think within the short 1 year time frame, that's going to be the major focus.
In Korea recently, I chatted with Rect, the Rect team. Have you heard of this? The Rect Water, and he talked about his kind of primary goal as just eyeballs, and their products, their physical products and their digital products are all about driving eyeballs. You guys are much more nuanced with what you're doing, but do you have a similar kind of singular focus where you say, if we can just drive, adoption of this, or if we can drive users of this, then everything else will take care of itself? How do you view that? Yeah,
so like I guess the thing that we're looking for is more, just adoption of Door, and down to like the number of operators that are building on top of us. And I think with specifically for the number that we're looking at is the notional amount that is being referenced.
Okay.
And with FalconX, I'm quite confident that we're going to hit more than like $1 billion in volume traded.
Wow.
And it's such a quiet thing, like because it's very hard for people to understand this product, but we envisioning being as big as TradFi, and even bringing on traditional finance products to be able to use and leverage our system. So that's the key metric for us. And ultimately, by having more volumes, there's more liquidity, and people can build more products on top of it, build structured products. So I think that's really what's going to leverage on top of what on the metric that we're focusing on.
That's an interesting ambition too. Like, do you think that potentially Door is like a more robust architecture than LIBOR, or could get there someday?
Oh yes, for sure. And LIBOR actually is now defunct as of 2 years ago, actually, interestingly. And the reason why it was defunct is because it's prone to manipulation. There was a LIBOR scandal with several banks that were colluding. There is a new system called SOFR, SOFR. And if you look at just the same way like you look at gold and Bitcoin, and you say like, wow, Bitcoin is just so much better. I think the system that we've built with the kind of incentives that we have, and obviously throwing the key there, which is decentralization, can create a better, more robust system for even in the TradFi world. So we're talking to very big institutions. I go to New York pretty often, and we're actually also talking to regulators. We're trying to get a license, like a benchmark license, and yeah. So we hope that eventually this will overtake what you see in the TradFi world.
So yeah, I guess that's kind of the holy grail of what we're all trying to build in crypto, is not only addressing the crypto market, but having the TradFi market come and use our products on their own merit and scale that way. So that's very, very cool. How do you view your role right now? Post token. What has changed, and do you feel like you can kind of work out longer to the longest time horizons, or are you kind of still in the trenches every single day trying to drive forward adoption?
We're definitely in the trenches. I think, there's a big change in once you launch a token, as a protocol that's launched a token, right? Whenever the price drops, like you see the correlation of people scolding you on Discord rises, and we feel it, right? And and the funny thing is that, all these all these people being angry, right? Especially when prices go up, you don't hear anything, right? I think the founding team feels it the most, right? Because we have the most at stake, if you think about it, right? And I think that isn't a bad thing at all, right? It's a form of accountability, right? And that now we have something that, yes, is very short term, based on the whims of macro, as with, what's happening this week, with ETH dropping below 4K, and naturally the beta of a lot of these altcoins, including us, would naturally fall. I think it's good, and it keeps us on our toes, and we're definitely very much in the trenches, and we're watching. We're very conscious of what is required, and ultimately, there's so many stakeholders that have believe in us. So I take it as, I mean, post TGE, you feel it even more in terms of wanting to deliver.
What's been the most enjoyable part about building Treehouse, and the most difficult part?
Oh, okay. Most enjoyable part, I think, when you start your own project, I think the word is like liberating, because you get to do what you really like to do, I hope so for people who start projects. At least for me, it's fun, right? It's not work to me. It's I enjoy it, and I'm doing what I love. Creating the concept of Door, it took a while, but I wrote a book on it. I really do enjoy the topic, so it's not something that I'm just doing it for any other reason. It's and compared to what having like a 9 to 5, it's liberating, right? The word. I think that the toughest thing is you at the same time, yes, you can do you can do what you love. There's a lot of like people that look to you. Right, you have to be very accountable to the public, to your own team, and there's some things also that you realize that you can't control. So I think the toughest thing is we've been around for close to 5 years now, and in crypto, 5 years is like 30 years, right? It's like 10 financial crisis, and obviously when FTX and Luna happened, the space was in a tough time,
right?
And yeah, for us, we just had to hunker down. We had to keep, stay lean at that point of time, and it was a tough period. But we've been here, and we're here to stay. But I'm glad that we got through that. And with the whole space as a whole, I think we were talking also in 2000.
Yeah, I was trying to remember the first time we chatted. Yeah, I remember the apartment I was in. So it must have been like fall 2022. So it
was tough for everyone, right? And we talked for a bit. Yeah, I remember.
That's funny. What has been your biggest lesson as a founder that you've kind of learned throughout this time?
Yeah, sure. That's a great question. I think as a founder, when you learn, you want to do a lot of things, right? You want to do everything you need to get your business to do well. But I think the biggest lesson is staying focused, right? There's a lot of times I feel it's all about saying, you're going to say the most important question you have to say, or the answer you have to give, is no. Because you always have new opportunities that are coming in. And at the end of the day, like, as a founder, you have limited resources, right? So I've learned over the past few years to just only focus on 3 things. And, to be very clear and transparent to my team that, hey, these 3 things are things that only I can do and I should focus on.
Right.
And everyone has their own 3 things. And generally, these 3 things should be all interrelated, in that by getting the first one, it's going to be a lot easier to get the second one. So, it's like a compound. So staying focused is probably the most important thing. I always tell this to my team. We're kind of like a ship, right? And if we get bigger, it's going to be harder to turn. And, ultimately, there's so many ways of moving towards a specific direction, and we have to be very focused. Right, the theme that what we're trying to build towards, and we've said no. Like, I've learned to say no to a lot of things.
Yeah, especially, crypto is so kind of volatile is it's
There's a
definitely
lot of
volatile,
shiny things here and there. And it's short-lived, right? So knowing how to see between what's real, what's not, and then also like just always staying focused.
Right. You can get caught up in the kind of chasing narratives maybe.
Yes.
And that gets you the hit of kind of like temporary success, but you need really developed conviction. And I think one thing I commend you guys for is your ability to be convicted around a single idea and just say like, this is the path. Obviously, being adaptable is still important, but understanding, conviction in an idea and that understanding that as a founder is very, very important. So it's a very interesting piece of advice as a founder, and I think an accurate one, especially for crypto.
What would you say if I throw the question back to you?
Thank you. I'm more of a solopreneur, lifestyle entrepreneur than you, but that's a good question. I would say, I think the most important thing is kind of patience, because crypto is so, fickle, and day to day, you can be up or you can be down, or, sales can be going bad or sales can be going well, or, your portfolio is up and, you're making deals, or vice versa. And like, just to understand that the line is not, is not stable, but it kind of trends upwards, and being patient and being okay with that. I think if you can't accept that it's going to take time and you have to be kind of long-term oriented, you'll just like drive yourself crazy in this space. It's really difficult.
No, I agree. Yeah.
Yeah. Thanks for asking that. I appreciate that. What's your greatest possible, I mean, you addressed it a little bit, but what's your greatest possible ambition with Treehouse and where the company could someday go?
Yeah, sure. So, I the goal is that anything to do with fixed income on chain, off chain, to be tapping on what we've built. Again, benchmark is extremely critical in traditional finance, right? And if every single loan that you see, if you look at your term sheet, there is a benchmark in some form of way. And it's done for a very specific purpose, which is that it helps keep the market efficient. And it helps, these institutions that are providing these loans to hedge among themselves. I think, as crypto starts to mature, you're going to need this. And we're the only ones that are really focused on this and in a decentralized way. So I want any form of, anything related to fixed income to be powered by the Door system. And we're not, like I said, we're not just stopping in crypto, right? We're also going to the TradFi world. We're trying to bring some of these benchmarks on chain, and Door system is capable of doing that.
Do you think there are existing companies that you look to as kind of competitors, or do you think you guys are really kind of carving out your own category, and the way that this is managed is looking different because it exists on crypto rails?
Yes and no, but I think at the end of the day, like I always tend to want to partner. Right. I look at, the biggest benchmark players in traditional finance, besides, the regulators themselves, like a Bloomberg, who we actually talk to quite a lot. Having the expertise that we have, it's on chain, and the system that we've built, instead of saying, hey, you launch your own, index or your benchmark, and then, we will compete. I think that, hey, we've kind of built the Door system such that you can actually leverage our system for existing benchmarks and to plug it in. So I tend to want to look at it from that perspective, that it's more collaborative, and we're partnered with a bunch of different benchmark providers. Yeah,
that's interesting. So the more you collaborate, ultimately the more success. It's like an accretive game versus a competitive game.
I agree.
Excellent. Well, I think that's a great note to wrap up on. Thanks so much for your time here. It's been awesome following your journey, as we talked about, since mid 2022. So, and now we're at TGE and beyond. So it's cool to hear you chatting about, now tackling the institutional space, stuff like that.
Sounds good. Thanks for having me on.
Excellent. Thanks so much.